Welcome back to Islamic Finance Unboxed, the channel where we break down complex financial concepts through a Sharia lens. Today's episode is all about a question many Muslims and even non-Muslims are asking. How do Islamic credit cards work? Can they really function without interest, or is it just marketing? Are they truly halal, or is there a gray area? Let's dive deep and separate fact from fiction. The problem with conventional credit cards. Let's start with what makes conventional credit cards problematic under Islamic law. Conventional cards typically operate on the basis of riba, that is, interest. When you carry a balance beyond your due date, the bank charges interest on the amount you owe. This is strictly prohibited in Islam. So, the central issue with credit cards isn't the plastic in your pocket. It's the interest-based debt trap that many fall into. This raises an important question. Can you still enjoy the convenience of a credit card without falling into riba? Another controversial debate is whether the interest on financial tools is the same as the prohibited interest, riba. Banks are taxpayers and official agencies audited by the government. The contract clearly states the interest ratio, and prepayment and canceling contracted interest is probable. The banned interest may not be the same as the traditional unauthorized interest. When buying items, paying in cash may provide a discount. Conversely, long installments increase the sales value of the items purchased. No one says that this is riba or interest. What is an Islamic credit card? Enter the Islamic credit card, a modern financial innovation that attempts to offer the benefits of credit without violating Islamic principles. But first, let's clear up a myth. An Islamic credit card does not mean you can borrow money and pay back later with interest removed. Instead, it's built on entirely different contractual structures. In short, Islamic credit cards avoid interest, prohibit excessive penalties, and are structured to ensure Sharia compliance. They are approved by a Sharia advisory board, which oversees how the product is designed and operates. But how does this work in practice? Let's explore. Sharia-compliant structures. Islamic credit cards are generally based on one or more of these structures. 1. Ujrah-based model, fee-for-service. Here, the bank provides a service, like payment on your behalf, and charges a fixed administrative fee, not interest. You're not paying extra based on how much you owe or how late you are, just for the operational service. This is permissible under Islamic law, as long as the fee is transparent and not linked to the time or amount of debt. 2. Tawarruq-based model, commodity Murabaha. This is more complex. The bank buys a commodity and sells it to the customer at a deferred price, Murabaha. The customer then sells the commodity for cash and gets funds up front. Repayment is structured in monthly installments. There's no interest, but the markup is disclosed and fixed. Although this method is allowed by many scholars, some argue that it may resemble conventional credit too closely. 3. Ujrah leasing. In some models, a portion of the card's function is seen as a leasing service, where the bank provides access to certain benefits, like airport lounges or insurance, and you pay a fixed leasing fee. Again, the idea is that this fee is not tied to interest, but for a real service. All of these models are designed to replicate the utility of credit without falling into interest-based transactions. Key features of Islamic credit cards. Here's what typically distinguishes an Islamic credit card from a conventional one. No interest, riba, on balances. No compounding charges or late interest. Fixed, disclosed fees, Ujrah. Approved by a Sharia board. Ethical usage terms, no financing of haram activities like alcohol, gambling, etc. And in many cases, Islamic credit cards also discourage prolonged debt by encouraging full monthly payment, aligning with the Islamic principle of avoiding unnecessary debt. How repayment works. Repayment on an Islamic credit card is a critical part of the model. Most Islamic banks encourage full repayment by the due date, allow for installments under Murabaha or Tawarruq structures, do not charge interest, but may impose a small penalty if payments are late. However, if any penalty is imposed, it usually goes to charity, not as income for the bank, to avoid profiting from delay. This ensures that any fine acts as a deterrent, not a source of profit. The small penalty ratio is very close to that of conventional credit cards. Islamic banks insist that this late payment penalty is not interest. However, this is not widely accepted. Advantages and limitations. Let's talk honestly about the pros and cons of Islamic credit cards. Advantages. No riba, Sharia-compliant. Ethical spending model. encourages responsible financial behavior, can still offer rewards and benefits, points, travel perks, etc. Safe for Muslims concerned about their income and debt practices. Limitations. Often more complex in structure. Higher fees in some markets due to strict compliance. Less widely accepted than conventional cards in some countries. May have stricter eligibility or spending limits. So while they're not perfect, Islamic credit cards offer a solid alternative to interest-based credit systems. When you buy many items from the market, you put them in your basket. There might be beer among the other items. You passed everything through the cash point and paid with an Islamic credit card. The non-halal items were bought with an Islamic credit card. Managing procurements is not an easy issue. Popular Islamic credit cards worldwide. Several Islamic banks across the world offer Shariah-compliant credit cards. Rajhi Bank, Saudi Arabia, offers Ujrah-based credit cards with no interest. Maybank Islamic, Malaysia, their Islamic cards use the Tawarruq model. Dubai Islamic Bank, UAE, provides a variety of Shariah-compliant cards. Meezan Bank, Pakistan, features the first Islamic card in Pakistan, based on Ujrah. Even global banks like HSBC, Amana, and Standard Chartered Sadiq now offer Islamic credit card products in Muslim-majority regions. The Islamic finance sector is growing, and consumer demand for ethical banking tools is part of the reason. Many of them uses global same-service providers for credit card structure like Visa. Fatwas and scholarly opinions. Islamic credit cards are generally approved by Sharia supervisory boards and supported by modern fatwas. However, scholars emphasize that the structure must avoid disguised riba. All terms must be transparent. Users should pay on time to avoid even permissible penalties. Like all Islamic financial products, the intention and application are key. If the tool helps avoid interest and promotes halal transactions, it's encouraged. But if it becomes a loophole for abusing debt or delaying payments, it loses its value. So to wrap it up, Islamic credit cards are real, functional, and Sharia-compliant tools. They allow you to benefit from financial flexibility without compromising your values. But like all financial tools, they require responsibility, discipline, and understanding. At Islamic Finance Unboxed, we believe knowledge is your first protection. Let us know in the comments. Would you use an Islamic credit card? Or do you still prefer to operate in cash or debit-only mode? Don't forget to like, share, and subscribe, and stay tuned for our next episode, where we'll break down another key concept in faith-based finance. Until then, spend responsibly, spend ethically, and stay unboxed.